This is David Patrick, Fitzstock Charts, midweek market video analysis for January 8th, 2020. We're in a 19-day uptrend and we have volatility up the kazoo, but we're still in trend. This is the week before monthly option expiration. We talk about it every single month for the last 6+ years. A lot of times, what happens is the market hits some sort of quote-unquote pivotal lows. Why do we call these pivotal lows? Sometimes they come from higher levels, sometimes they just sell off. Because many times after this low is created this week, this low holds for multi-weeks. Does it always happen? No. Is it a statistic that's overwhelmingly been consistent for us on those lows holding? Absolutely. Absolutely. And last year, I specifically pounded, I may pound the table every year on this, but specifically last year, on staying long in uptrends versus your stops. The stops are listed on the ESFL. My stops are listed on the daily updates. If you're not staying long versus your stops, you're not listening to anything I'm saying. Anything. Because I say it on every single video. I say it on Twitter every single day. So I don't know what else to say in reference to that. Because, I have some subscriber questions real fast I'm going to go over. And I don't want to rant because I'm on your side, but I'm frustrated that we're not listening to what the tape is telling us, because that's what I'm here for the last 6+ years, is to pound the table on that. And I take a lot of pride on the subscribers succeeding, and most of you are. And I want everybody to. And that's why I'm very emotional on what I do. I'm very enthusiastic. And I'm excited. And I want everyone to succeed. It's not easy. Sometimes it seems like easy when we dissect these charts. But I always say keep the emotions out. Keep the opinions out. Trade like a robot. I say the same things all the time. I sound like a broken record. I want everyone to be on the same side. I don't want everyone to make mistakes I made in my early career. I don't want that to happen. That's why I'm doing the service. Do I make mistakes as a trader? Depends on what you mean by mistakes. Do I have losing trades? Everybody's got losing trades. Do I do things? Do I violate, break some of my rules 99% of the time? No. But, we all have our trading demons that we fight, whether it's risk management or discipline or emotions, opinions, or whatever. So, yeah, you're always going to have those battles that you fight. And, right now with what's going on over in Iraq, and then obviously we had the China situation a month or so ago, you're always going to have event risk, whether it's political risk, global risk, economical risk, whatever it is, you're going to have risk. That's what the market is. It's all about risk. But you want your reward to outweigh your risk. And at least I keep saying, I still believe reward is higher than risk. Now, we're always going to have the risk of possibly coming in and the markets are limit down and we can't get out, or we get out of a trade below our stop. That's the risk you take, and that's the risk. That's why I always say stay long versus your stop, but use your risk profile, meaning some of us are 150% long stock market. Some of us are 50%. Whatever that is, that you're comfort with knowing what your risk is. Okay, a couple of things I'm going to address here. So, I'm sorry for being all over the map here, but I want to address these. These are super important. All right, I'm going to try to go over all these. Someone had mentioned they were stuck short. That happens. I get that. Number one, and I always say this, is a myth on Wall Street that you have to short stocks, that you have to trade both sides. You don't. Okay? So if you're not experienced, you shouldn't be shorting. If you're not aggressive, you definitely shouldn't be shorting. All right? That's the first thing. And if we're in an uptrend, Why are you shorting? So listen to me when it comes to that. 2008 was my best year trading. We were in a bear market. So it was a cash market and or you shorted. We're not in a bear market. All right. Last night there was a ton of 5-minute rules of engagement. Did you have to trade last night? No. Did you have to stay up all last night listening to the news like I did? No. Was there some low-lying fruit last night to get long the market? Absolutely. Absolutely. You didn't have to trade it. You only trade futures if you're a day trader and or you're aggressive and or you know what you're doing, right? But yeah, there was some great trades last night. But the service is not about last night. It's not about last year. It's not about 5-minute rules of engagement. It's about our focus list. And we'll get to that in a moment. That's what I create. That's what I do all my time besides answering questions, doing consultations, charting, videos, stuff like that. I'm scanning. That's what I do. That's what I love to do. And I just provide it in a simple format, the ESFL for us to trade. So it's so easy. You just have to open up an email and say, wow, this is my entry, this is my stop. By all means, if you can do something like that, which is super time intensive, since all my scans are manual, and not only am I looking for rules of engagement, I'm looking for historical chart pattern comparisons to give us even a higher edge. But if you can do it, that's awesome. But I'm here to guide you if you can't, or to help. That's what the service is about. So we talked about being stuck short or shorting in general. We talked about 5-minute rules of engagement. We talked about news, although I posted some news yesterday, or I what do they call that? Retweet. I'm not trading news or based on bombs dropping. I'm not trading that. I'm trading price formation. That's why I'm still long. We got to go over the stop levels too, which I got to make a note to do in this video. The January effect. We're in January. We just had the Santa rally. The January effect. We have earnings season coming up. But we have to get through this week. This is the week before OPEX. By the way, many times we hit these pivotal lows on Thursday and Friday. We haven't even got to Thursday or Friday. Now, I did post that it's very, 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 very possible that the lows we saw in Globex could be those pivotal lows. But we can also retrace. We've gone up 60 plus handles since then. So we can easily pull back half of that, easily. Does that have to happen? No, but we have to stay on our toes, right? Edge of our seats. We're going to look at 1925 historical chart pattern comparison. The existing ESFL, that's what I spent all my time doing. All my time besides, like I said, besides the consultations, answering the questions, which I love doing, and scanning and charting and all that. And doing the videos. That's what I'm doing. I prepare the ESFL, the focus list, the daily focus list. What does that consist of? It consists of stocks I'm looking at that are 8, 9, 10 star ROE. If you don't know what that is, go to the website and subscribe or grade your trade. I'm scanning for those. Doesn't take a couple minutes, believe me. Once I find rules of engagement, then I look for historical chart pattern comparison. I'm looking at hundreds, sometimes thousands of stock charts to say, hey, wow, this Apple chart looks like Google of 2007 or whatever. We've had a zillion of them. We hit it out of the park with Tesla recently. And now we have this Shopify, which is setting up like Apple of 2005. We talked about that. So by all means, if you can do that, go do that. But that's what I do. So there's no reason to go off the grid. There's no reason to go searching for or hunting down stocks you think are great. By the way, you can email me. I'll let you know what I think of them. But why are we doing all the extra work? It's about quality, not the quantity of hours you're putting in. Quality, 9:35 to 11 a.m. There's your quality. Trade the ESFL. Once again, sorry for ranting. I'm getting a lot off my chest here. I just want everyone to succeed. I have a lot of passion in what I do. And I want everyone meaning everyone in the service, that's my goal, to succeed. For you to succeed. This is multiple questions. I think it's the third time about what do you think of EEM? It's real. Why would I go to EEM when I have the spiders, when I have the UDAW, when I have TQQQ? When our markets are breaking all-time highs, why do I need to go to an outside market? So stay on the grid, please. All right. And then, so someone said, I know what I need to do. I know the changes I need to make. I just can't make it. Let me just tell you. Every day at 9:35, because we use the 5-minute rule, right? Every day at 9:35, we're blessed by the opportunity to do whatever we want to do at 9:35. We can short, we can long, we can trade options, trade futures. We can not trade. But we're blessed with that opportunity to break bad habits, because everybody has them. So break them. It's real simple. Break the bad habits. Don't make excuses. I can't do it. I know what to do. Do it. All right. I think that's it. All right. Let's look at, talk about subscriber questions. Stay long. 19 days. And once again, I apologize. I'm not yelling at you or us. I just want us all to be crystal clear on what we do, right? On how we make money trading. We don't make money going off the grid consistently. Don't make money listening to CNBC or even staying up all night on Twitter. That's not the bigger money. We're looking at the bigger money right now. This is what you're looking at. This is the big money right there. This is what the ESFL that I spent all my time scanning for rules of engagement, relative strength, historical chart pattern comparisons, and I built the ESFL, and this is what it turned into. 1,187 different trades that have essentially doubled. 315 of those tripled, by the way. No reason to go off the grid. 17 doublers with January and February contracts, 5 triplers. Last year's numbers, we batted 89% with 489 different trades. Now this year, I'm going off 2020 contracts, which include all the January and February contracts. We have 51 January contracts that have engaged so far. And that's not from January 2nd. That goes, some of these January contracts engaged back in December, obviously. 51 of them. We have 7 no scales currently on our ESFL and 2 losers. And by the way, I did have some subscriber suggest that I keep losing or stopped out trades on the ESFL until they're officially wiped off. They're all wiped off a month after they expire. And I keep the ones that are expired for a month on the bottom of the ESFL, and I highlight them in gray to let you know they're expired. So I'm going to try to listen to that suggestion. I'm open-minded. I'm not a bullhead. It might sound like I'm crazy right now because I'm yelling. I'm not yelling. I'm just excited. I'm excited for this market. I'm excited for this year. All right? So I'm going to keep those losers, because we have them. Everybody does on the ESFL. So if you have suggestions, sometimes I just say, hey, no, I'm not going to do that. And sometimes I say, hey, that's a good point. I'm pretty open-minded. So anyway, 51 of those 7 to 42. So we're at 82% win on our January and February contracts. So that's phenomenal. And yeah, I got to be honest with you, this week has been super challenging. But we knew going into this week, we knew it was going to be a challenge. Did we go into this week thinking, oh, wow, this is the week before OPEC, so we're going to crush it? No, I hope not one of you thought that, by the way. Because go back and look at the daily updates that says we are going into the week before OPEC. Expect pivotal lows put in. Could be from higher levels, could be from lower levels. That means volatility. Did I know that bombs and stuff are going over in Iran, Iraq? I didn't know any of that. I'm not trading that. But excluding that, we would have saw the volatility anyway. All right. We are now 14 minutes in, and we've got a lot to cover. Historical chart pattern comparisons. They are on the website under, I think, charts. And that's not updated because I'm overwhelmed with things to do, so I haven't updated that. But we have, I would say, at least 10 good ones every year. And we continue to look at this 1925 Dow Jones over here, and we're in a wedge pattern. And if you remember, I got to get these futures. I got so many things to talk about. My head's spinning. ES. Wedge. And last night. Okay. Sorry about that. 1925. Okay, so let's go over. Here's 1925. Why does this still look similar? Well, MACD bear cross. Guess what we just saw? Maybe I'll blow it up so you can see it a little bit better. MACD bear cross. It's heading straight down the Dow Jones. This one dug a little bit deeper below the 10 SMA. We're not done with the week. That could still happen. And by the way, it dug super deep if we looked at Globex. And we will in a second. But anyway, and I suggested this after we hit the bottom of the wedge, which we did here. And by the way, we did hit the bottom of the wedge in Globex, if you look at YM, Dow Futures. That this is what could happen. And this would make the most sense. Does it have to continue on the same page? No. But this makes a lot of sense before we go higher. Take out stops, get knocked out of trend, at least on the Dow, and then rip into earnings season. So, and rip into earnings season, maybe without MACD hitting new highs, even though it did up here. I think what's happened over the last couple of days is it's really shaken the tree. The weak links are long gone. They're not going to hold long when you see Dow futures down 400 last night. Those people are out. They're flushed. So that's a good thing. The market's cleansing weak hands right now. Okay, so yeah, I still think, Jesus, another thing I better write down is measured move. This one did see a measured move, and let's just go to the SPX so it's easier to say. I got so many things to do, and I didn't want to make this video so long. I started this crazy ranting. I didn't want to, but I think it's important. All right, let's change this. Computer's super slow. All right, what do we have here? We have a breakout. We had that 44-day uptrend, a huge uptrend here, and here's our SPX. So before we look at the ES, which is S&P 500 futures, because we trade that in a small time frame of 5-minute charts, we call it 5-minute rules of engagement. Let's look at this wedge, and we're going to look at closing prices. How do we look at closing prices? We just look at a line, and this right here to there. So that measured move, because we revisited those lows in Globex and actually got down to here. So right now, it's going to be easier to look at the ES because the ES is going, we're not going to go to the line, we're going to go to the bar. Hold on one second. Sorry about this. Daily and change these to, that candle's fine. Okay. So a lot of times what happens in Globex, it doesn't show up on the charts and retail doesn't see really what happened. And we want this. This happened last night. It definitely happened if you watched it. But look at the daily before we look at the 5-minute. If we continue on that same pattern we saw of 1925, well, there's your low and there's your high. So that gets you to 33.46. I think I posted 33.45. This is not an exact. You don't need to know exact. Let's just call it 33.45. 33.45 is your measured move. And I still think we can get to 34 to 3,600 at some point this year. So I think a bogey possibly in the next 30 trading days is that. That might not sound like much because that's only, what, 100 handles. Heck, we saw 60 handles in one night last night. But that's a nice chunk of change. 100 handles is what, 3%? That's almost 10% with a triple long. That's a nice move. So getting to, by the way, I posted this wedge yesterday. And I said the S&P could get to the bottom of the wedge. You might even break it. And I said this 3180 is, well, that's not 3180. Oh, this is, what's it, 3177. It's 3180 is right there. I think we hit 3181. Yeah. We stayed above the critical support I posted. So before we get to all of our stocks, this is what happened last night. All right. News hit in here, I think, and this thing just started going down. So real simple. What if you trade futures? What do you do? Well, you don't have to. First of all, in trading during violent times like last night, you don't need to. Okay. But if you did, what would you do? Well, if you did, you'd use our trading rules of engagement. We use price above this green line, the 10 SMA, and we draw trend lines, right? This is a downtrend line that we broke. We got above the 10 SMA right here. So you had your rules to engage there. This brings up a really good point. Someone was asking me, when do you take this trade? And it all matters on how aggressive you are, your risk profile, okay? You have rules to engage when price is above the 10 SMA and MACD is heading in the right direction, okay? Then you have your 2-star ROE, all right? You need those two, MACD in the right direction and price above the 10 SMA to get long. Everything else is going to give you more stars, higher probability. So if you waited for the close, probably going to increase your probability. If you wait for the MACD bull cross, going to increase your probability. If you wait for the second candle, it's going to be from higher prices, probably going to increase your probability. So anywhere in here you get long, and obviously you're scaling. I would not add on price strength confirmation because it's not a breakout. It's not a breakout. We need to get much higher for a breakout. So, and then we came in today and we have seen numerous setups. Obviously, we're coming in trade 9:35 to 11. This is crazy. I mean, simple downtrend line here, right? You get long. If you waited for a close, the MACD bull cross, and you waited for at least a 3-star trade, break of an uptrend, MACD bear cross right here, you could get short, draw another trend line. Real simple. We're not above the 10 SMA. You can't take it until here, right? And if you wanted to wait for the second candle, that's fine. You wanted to wait for the bull cross, that's fine. All matters in your risk profile. So that's how you trade 5-minute rules of engagement. We are swing traders, basically are trading those rules of engagement in the daily. And then we let's look at it real fast, our weekly. And sorry about this video being long, but holy cow, was there a lot of stuff we just covered. The weekly. I'm going to look back at this rant I did and probably regret it, but it is what it is. Okay, so SPX weekly MACD is at, geez, that might be all-time highs. Well, it's pretty close. That's confirmation. We've been in an uptrend the weekly since September 2nd, 2019. We never broke trend here. That was intraday, intra-week, right? Closed above the 10 SMA, all these. That is a long uptrend. This was a long uptrend too. This one went from 25.90 to 28.80. That's a massive uptrend. So we never want to pick the top. Let's ride the trend. Let's stay long versus our stops. And now I'm going to fly through, since I spent so much time already ranting, fly through our charts and see what we see. Okay. We just saw the SPX. What do we got? The NASDAQ. NASDAQ, same thing. NASDAQ's hitting a 52-week high today. This is completely crazy with what happened last night to where we are right now, which is amazing. The relative strength of the NASDAQ is so bullish. So bullish. So Dow's up 100 now. Dow futures in that. NASDAQ futures are up 33. So the NASDAQ composite is hitting a 52-week high. MACD's flat. Let's look at the transports. Not really cooperating. They're not really telling us a lot. They're just not leading. And what's the IWM doing? Well, it's in what, a 3-day downtrend looks like, or maybe no trend. MACD's bearish prices below 10 SMA. So it's not leading, right? XLF, financials, not leading. Where is all the money going? How's this market up? IBB, not leading. In fact, looks ugly. What about XLE? Not leading and ugly. So wow, we just looked at, what did we look at? Oil. We looked at financials. We looked at small caps. We looked at transports. We looked at IBB. They all look not good. But yet the Dow's up, the S&P's up, and the NASDAQ's up. All you need is the NASDAQ and the industrials. That's all you need. I'd love to see other things cooperate, but let me just tell you, that's all you need. Industrials and NASDAQ. All right? And here's our industrials DIA. They're right at the 10 SMA. SPX right there, and obviously NASDAQ's break out the new highs. TLT, what are bonds telling us? They've been a trading range forever. They're still a trading range. Gold. Wow. Massive move. And we hit it on the park with gold and a few other of those. Would I add up here? I don't know. I mean, it's a bull flag, the new highs. I personally wouldn't add. I would wait for it to set up. I just hate chasing. This is just a massive move. Can it go a lot higher? Absolutely. It's just going to go higher without me. Apple, I am long Apple. There's our last 12 entries on Apple. They're all in the 90% club. They look phenomenal. I'm probably going to wait for after earnings before a new Apple trade. Amazon is getting better. Still looks good. Netflix, that's a bull flag. And I think someone asked me this. Why did Shop engage on price strength confirmation, not at new highs, but Netflix had to engage at a higher price? Real simple is Netflix is not a 10-star ROE. Shop is. And when something has a 10-star ROE, we might be more aggressive on getting in. So this is still taking some time. It's still a bullish trade, but 200-day moving average is moving down. 50 is below 200. Take 2 stars away just for that. The most this could be is an 8-star ROE. It's not a bull flag to new high, so that makes it a 7. So I'd have to go through the rest of the grade your trade, but you have that vehicle to look at too. It's a 7 at most. So is it a good setup? Yeah. Can it take more time? Absolutely. Booking. That looks good. MACD's a little flat. I do like this stock still. Tesla, one of my favorites. I said it's going to 500. I still think it's going to 500, just like I said Apple was going to 300. Looks good. Google, I'm long. Bull flag to new highs. Looks great. Facebook, bull flag to new highs. Looks great. Intel, no. NVIDIA, pausing. Micron, looks pretty good. AMD, okay. Texas Instruments, OLED, pretty flat. I do like Micron, and I do like AMD, and I like NVIDIA. I just like some of these other names better. Microsoft's slowing down. Oracle, Adobe. Software. This is what happened, I think, early last year, right? Adobe, new highs. CRM, new highs. Now, getting ready to new highs. This is what led early last year. This is a very bullish sign. Workday, starting to erupt. Jobs pausing. Team improving. Expedia, excuse me, Roku. Roku's in that trading range and is underperforming so far. Baba. MACD is not on Baba's side right now. Baidu is improving, and that's filling this gap still. And looks okay. CYBR, I think, was in the 90% club, just hit. That looks like it wants brand new highs soon. As crazy as it sounds. VIV, VMW. Oh, VMW. Whoop, can I type today? No, VMW is there. CBOE, ICE, CME. CME looks really good. This is taking a long time. Hit some insider selling. It looks like it's meant nothing to price structure. Price structure is bullish. I think this thing went with new highs, as crazy as it sounds. So it is what it is. Box, GoDaddy, Wix. Wix is improving. Let's look at the banks, JP Morgan, Citigroup. They're all pulling back, which is exactly what we want to see. These have massive, massive gains they need to digest. Visa and MasterCard do look like they're resetting up for new highs and then some. So if I would play, in the financial sector, I look at the credit cards. Those look good. PayPal actually looks pretty good here. What is BlackRock? BlackRock looks okay too. Beyond Meat hasn't set up in a while. That's interesting. Bull flag above the 50 SMA. We'll have to wait and see. Anything setting up in oil? Halliburton, no. PSX, no. Ooh, that one looks ugly. Yeah, I would stay away from them. Las Vegas Sands looks really good. Win looks good. MGM. So the NASDAQ, Las Vegas Sands Win look good. NASDAQ looks good. PayPal, MasterCard, and Visa look good. Software stocks look good. What about biotech? No. ISRG, no. Aluminum, REGN, nothing. Flat. UI, CMG, Uber. Improving, and it doesn't matter if it's on the ESFL or not. It continues to have rules of engagement. We talked about above 3103. You could long this name. It's filling this gap. Still looks good. I hope it. This was by the way, I painted this picture. Not so bad. It's a pretty good projection so far. So I think if you get up here, even if you break this, maybe pull back, and this could really set up the first quarter of this year. Uber looks really good. If you're long, that's fine. It might be on the ESFL, it might not. You have rules of engagement, so if you're long, that works. Dropbox, DBX. Twilio, this one looked extremely bearish. It's totally reverse course. And now, yeah, this thing could go up to 118 pretty fast on Twilio. LK fell out of trend. I would let this thing reset up for our next one. Work looks really, really good. Breaking above this. filled this gap right here, could slow down, but this really is improving. So Work and Uber lagged last year, and they look like they're leading right now. We didn't talk about our shop. Shop was in 1, 2, 3, 4, 5, 6, 7 shops in the on the 7 different times. Hold on, let me see if I can find that historical chart by comparison. Okay, I got it. Pulled that up. So this is what we're looking at a shop. This is our current shop, and similar to Apple. I don't know where you would draw it. Maybe in here. Maybe it looks like this pullback here before Apple goes here, pull back, and ends up going much higher. And yeah, I think this shop gets to up here to $500. So, it might take 2 months. It might take in the first quarter. I think this could go at $500, which is, what is that? 25% higher. So shop looks good in my opinion. So let's finish the video here. Sorry for the rant. Sorry for a long video. We covered a lot. In summary, what do we have? We have a 19-day uptrend. We have volatility. We're the week before OPEC, so we often hit pivotal lows. We have non-farm payroll on Friday. Let's get rid of the bad habits. We all make mistakes. Stop making them. Just stop making them. Don't make excuses. Just stop making the mistakes. You know what to do. Open the email. Don't go off the grid. Use the ESFL. Open the email. See if we're in an uptrend. Allocate your capital accordingly to your risk profile, your trading time horizon. Trade futures if you're aggressive. You don't need to short stocks. If you're experienced and you're aggressive, by all means. But don't get stuck short in an uptrend. All right? Also know what you're going to do before you do it. Meaning, if you are going to short, define your risk, and let's just say you're short let's say you're short the NASDAQ. You defined your risk at the previous day's high, probably worst case scenario since the market's on an uptrend, and allocate accordingly. If you're willing to risk $1,000, $2,000, $500, whatever it is, and then move on to the things that are working, which is long positions and uptrends that are just in this raging bull market. And what's leading in the NASDAQ, which is software right now. It's Google. We just talked about 10 stocks that are leading. So once again, I think we're all blessed by 9:35 every day. We can come in and make the right decisions. If you haven't, change your ways and start making the right decisions and ride the trend. That's all I have for you on the market video update for January 8th, 2000.